Hey everybody, Todd Jeffries here with Chris Waters. How you been, man?
I'm good.
It's been a while since we visited.
It's been a while.
Yeah,
It's good to be on here.
so many things have happened in the housing industry lately. I mean, interest rates are still high.
Yep.
Read a story this morning in the Business Insider. Interest rates are high and prices are about to start to come down because of inventory, maybe that sort of thing.
You know, it really depends on what market you're in. In the greater Austin area, the number of homes for sale is up significantly. The number of transactions is down significantly, so the number of deals happening is down. There is one segment of the market doing really well. It's the new construction segment. So home builders, you know, their sales have jumped. On average, they're like 30% of the sales that happen in the greater Austin area. They're up to over 30%.
Wow.
So the home builders are having a lot of success. They are buying down people's interest rates to, you know, below 5%. And, you know, doing all kinds of incentives to get people in their homes and, you know, helping people get the payment they want on a new home. So home builders are having a lot of success. The resale homes are more challenging because, you know, especially in the suburbs, if you're competing with a home builder and you're trying to sell a house you've owned for that's like 3, 4, 5 years old, it's more competitive. But I mean, generally speaking, inventory levels are up. You know, I don't want to stay on here like what inventory levels at, because what's really fascinating about the Austin market is the number of months worth of inventory changes radically depending on what price point you're at. So there's certain price points where it's like stuff's still selling pretty fast, and then there's some price points where, you know, there's like a year of inventory. Like literally, it could take a year.
What's that price point? In my mind, you telling me that story, I would think the lower end price points are selling faster.
That's right. So
below
like,
5, below 6.
So homes under 400,000 are moving pretty quickly. You know, once you get between 400,000 and, you know, 700,000, they take longer to sell. You know, there's not a line of people waiting.
What about the higher end, $1 million plus?
It depends. You know, like the core of Austin, like, you know, $1 million, $2 million barely buys your piece of dirt.
That's a postage stamp.
Yeah. But you know, generally speaking, the higher end market's slowing down quite a bit too. I mean, you know, prices are down since the peak in the summer of 2022. I mean, right? I mean, just think about when rates started going up. They went up in March of 2022, April timeframe. So, I mean, that was the pinnacle of real estate in Austin, where we hit a ceiling from a pricing perspective. And since the, you know, Q2 of 2022, prices have come down significantly. So, you know, the big question is, when are prices going to come back? And that's really a function of interest rates.
We needed those interest rates to go up, didn't we? To bring the prices down at that time?
I mean, it was
more realistically speaking.
I mean, you know, I'm not telling anything anybody on here doesn't know.
Yeah.
Like, Austin was ranked #1 for the biggest incline. But now, I'm sure you saw this. Austin was on the front page of the Wall Street Journal, is also being #1 now for the biggest decline.
Yeah, the pods company, you know, the storage and shipping pods.
Yeah.
See that #5, Austin, Texas, the most people. What do you make of that? What is it?
Look, I think what's going on in Austin right now is just a lull. Like, the companies moving here, like, they're investing billions of dollars. They're thinking about Austin, Texas, the greater Austin area, over the next 10 to 20 years. Like, you don't invest a couple $1 billion and you're like, real estate slowed down this year, next year, like, maybe we'll pull out. No, they don't do that.
Yeah. So
I think the lull we're experiencing right now is a huge opportunity for buyers. I mean, you know, people have been complaining for the past 10 plus years, like, real estate's expensive. Well, now's that moment in time when you can buy and get a good deal. Sellers are more negotiable. You know, you're not paying way over asking price. I mean, you know, when you and I do this in 5-10 years, we're going to look back to this moment in time, and most people are probably going to say to themselves, gosh,
should have bought.
I wish I would have bought something.
Well, I mean, we've always said that, right? Always do. But you're right, because those big companies, Tesla, Facebook, Google, Samsung is growing. It's going to bring people here.
That's right.
And people will need a home.
Yep.
And it may affect the supply and demand again. So you're saying this is a brief window of a lull.
This is a, you know, I bet we're probably close to a bottom, if not at the bottom. And as soon as rates start going down, prices are going to go back up. Now, I would say for anybody watching this video thinking about selling, like, we're not going to see the prices we saw in the spring and summer of 2022 at the peak It's going to take us several years to get back there. You know, prices are down 30%. And so a healthy real estate market goes up roughly 3, 4, 5% a year.
Right.
So if you need to get 30% appreciation to get back where you wanted to, just do the math. Your house gains 3 to 5% per year. How many years do you have to wait to get up 30%?
Wow.
So like if you need to sell, you know, and you're dead set on getting that price, you probably need to be prepared to stay in that house another 5, 6, 7 years. So it's going to take us some time. Prices don't typically, you know, go up 30% in a year like they were in Austin during COVID. Like that's just not normal.
Yeah.
Like those are like unicorn years.
Those interest rates jumped in what, 2022, March, April.
March, April, they started going up.
If you bought in January or February, you paid top dollar.
You know, you're
not leaving for a while.
You're upside down.
Really, you may
You're
have to stay
upside down.
there, turn it into a rental property,
Well,
or be there for a while.
If you know, we have people that call us. You know, they're in a must sell situation. They've got a job relocation. Like they refuse to rent out the house. They bought it, you know, in Q1 at these peak prices, and you know they put down 20%, and you know that 20% down payment is gone. It's gone. And to sell the house, they'd have to bring some money to the closing table.
Wow.
Because prices are down 30%, and they only put down 20%. So
that sounds like a really dangerous situation. Where I mean,
it's the thing is though, there's like, you know, there's not that many people in that situation because. Right. You know, the number of transactions that was happening towards the end were a lot less than normal. Like there were a lot less deals happening. There was a lot of friction in the market because, you know, there weren't that many. I mean, just for reference, so back in 22, towards the beginning of 22, before rates started coming up, in the greater Austin area, we're talking about a huge area, right? From like Georgetown all the way down to San Marcos.
5 counties, 6 counties. Yeah.
There were only 25 houses on the market. 2,500 houses. That's it. For that huge area, 2,500 houses. But if you look at the MLS today, for that same area, there's over 10,000 houses for sale.
Wow.
So there weren't enough houses for sale back then, and so not that many people were buying, and so there's not that many people upside down. So, you know, if you're, you know, maybe one of the follow-up questions in the comments is like, well, are we going to see, you know, more distress from these people upside down? The answer is no. Like the market's going to suck it up. I mean, you know, Austin's got, what drives real estate prices is job growth, right? And so like jobs are still on the rise.
Right.
The issue, which we talked about in Facebook videos, I mean, multiple times, is the huge ceiling, and we talked about this on this video. I don't even know how many times. That like Austin is like an affordability crisis. You know, like the income levels in Austin couldn't keep up with pricing. Right. The average price in Austin was over $600,000, and you just go an hour and a half south to San Antonio, you can buy a house for half that price.
Yeah.
The average price like $310, $320, and it's like $630, $640 in Austin.
Is that just because of the demand of people wanting to be here? The tech companies coming here, it's kind of the epicenter of that industry. And
I mean, it's, you know, what makes Austin great is we've got an incredibly diverse, you know, industry base. You know, like the educational system's huge, the tech industry's huge, medical. I mean, I mean, it's just this is a very diverse job market. If you go to a city like Houston, you know, it's like very heavily oriented towards oil and gas and medical. Right. You know, Austin, for those that were in Austin back during the savings and loan crash, like Austin was, you know, very one-dimensional.
Right. That diversity helps us navigate those roller coasters.
And that's why for the last probably, you know, 3 decades, Austin has been pretty stable.
Right.
And, you know, you even go back to the Great Recession, home prices only went down 6, 7, 8% compared to the rest of the U.S. But we did get our butts kicked this time around because prices skyrocketed. We had lots of employers moving here. Right. And Austin was on the front page of, like, you know, every publication imaginable as why it was the greatest place in the United States to live. Right. So, you know, this is a blip in the road. If you're a buyer, it's a great time
to buy right now.
If you're a buyer, it's a great time to be buying.
Because when those interest rates dip a little bit, right around 7% now, let's say it goes down to 6.
Yeah.
What does that equate to in the rise of a price? Can you pinpoint a dollar to it? I know it's kind of
you know,
1 percentage point is $10,000 increase. Another one is another 20 or what?
I could normally answer that question, but Austin's a different beast.
Yeah.
You know, it's like a totally different beast. When rates went down from 4 to 3%, I mean, we saw prices in Austin shoot up 30%. And so, there, one piece of the equation is, when rates go down from 7 to 6, there's an obvious payment savings. And then obviously, with that payment savings based off your income, you can afford a much more expensive house. But how that impacts, the appreciation or depreciation is more challenging to answer.
Interesting. And so many people, are kind of just staying put too.
I mean, if you've got an interest rate of 3 to 4%,
why would you?
That's
free money.
I'm sure. I got a call from Bob on
Bob Fonseca.
Yeah, I got a call from Bob, and I'm sure he's been talking about this on the radio.
Yep.
He had this duplex. The tenant destroyed it, and Bob called me. He's like, "Man, I'm tired of dealing with tenants." And I told Bob, I'm like, "Man, if you can hold on to this thing, I would. You'll make a lot more money in the years to come." But it is going to take you several years. Like, we're not talking about a year or two. Like, for everybody that's like, "Oh, I'm going to wait till next year to sell because prices will be back up." No, not the case. You're going to need to hold on to the house for another 5-6 years to get back to where we were.
Yeah. My son was in that situation out in Hutto. Yeah, definitely. He bought a house in December of that year before the interest rates went up. Yeah.
I mean, if, the people that were helping in the sale of their home, they're going through major life events. So, their kids are off to college, they can downsize, they can save a ton of money on property taxes, they can save a ton of money on overhead of this big house. They're going and RVing and traveling the world and enjoying retirement. And so for them, they're a little worried their nest egg shrinking, but the truth is their monthly savings is going to be huge. $4,000 or $5,000 a month in monthly savings times a year is $50,000 to $60,000.
Yeah.
And so 60,000 times 5 years, that's $250,000. Is your house going to go up in $250,000? I mean, it's more certain that you're going to save $250,000 because you don't have all the overhead over the course of 5 years of home ownership.
Right.
So downsizers are the ones still selling because there's certainty on that cost savings. And then people going through some tough times, like people that are divorced, financial distress. Yeah, life happens.
Life happens.
Those major life events, like it's just those are the folks that are having to sell. But if you're a person that I call as a lifestyle upgrade seller, like you got a better paying job, you got a new kid on the way, like those are the ones that are having a hard time giving up that interest rate.
I bet.
They might get bunk beds in the kids' guest room.
Right. You might get a new kitchen.
That's what I'm doing.
Yeah. You mentioned how some builders are buying down the interest rate for the buyers.
Yep.
How does that work? What does that mean?
So
they're basically giving me money.
Yeah. So I mean, first off, some of these home builders, they own mortgage companies, and so you don't have to buy a new construction home to buy your rate down. So you can pay the mortgage bank money to buy the interest rate down, but in this case, the builders are using the proceeds from the sales price to cover the cost to buy down your interest rates.
So the price of the home may be a little bit higher.
The price,
but you're going to get an interest rate that saves you monthly.
The sales price is I don't want to say inflated, but the sales price definitely includes the cost of buying down the rate. And for a lot of people, that monthly payment is more important than the gross sales price.
That makes sense.
Yeah.